This is gonna blow your mind. How two dreamers turned the way we work upside down and built a $47 billion empire from a simple idea. The year was 2010. The world was changing fast, and nowhere was this more apparent than in the bustling streets of New York City. In the heart of New York City, a revolutionary idea was quietly brewing, ready to disrupt the way people thought about work and community. Two ambitious entrepreneurs, Adam Neumann and Miguel McKelvey, envisioned a bold new future for work, one that broke away from the isolation of traditional offices. They imagined vibrant collaborative spaces where freelancers, startups, and businesses of all sizes could thrive together, sharing ideas and resources in a dynamic environment. This was the genesis of WeWork, a company that would soon become synonymous with the co-working revolution. Neumann, a charismatic and ambitious leader, believed deeply in the power of community and the magic that happens when people come together. McKelvey, with his background in architecture and design, focused on creating inspiring functional workspaces that sparked creativity and collaboration. Together, they tapped into the rapidly growing gig economy and the rising desire for flexible work arrangements, recognizing a shift in how people wanted to work and connect. WeWork wasn't just offering office space, it was selling a lifestyle, a sense of belonging, and a new way to experience work. Early WeWork locations were an instant hit, buzzing with energy and filled with people eager to be part of something bigger. These spaces were more than just desks and Wi-Fi. They became thriving communities where ideas flourished and connections were made every day. Events, networking opportunities, and a focus on thoughtful design created an atmosphere of energy, innovation, and possibility. Word spread quickly, attracting a new generation of workers, millennials and beyond, seeking an alternative to traditional offices, and eager to join a movement that promised more than just a place to work. I'm sure you've heard the news. WeWork went from a scrappy startup to a global giant seemingly overnight. But how did this meteoric rise actually happen? Fueled by early success and a bold vision for the future, WeWork embarked on a period of rapid, almost frenetic expansion. The company's founders believed they could revolutionize the way people work, and their ambition was contagious. New locations popped up across the United States, then internationally, as WeWork set its sights on becoming a truly global brand. Cities from San Francisco to London and even as far as Shanghai soon boasted the WeWork logo. The company grew at an astonishing rate, fueled by a seemingly endless stream of venture capital. Investors, eager not to miss out, poured billions into the company, hoping to ride the next big wave in tech-enabled real estate. Neumann's bold vision and WeWork's impressive growth trajectory captivated investors, who were drawn in by his charisma and the promise of massive returns. From a handful of shared spaces in New York, WeWork expanded to hundreds of locations worldwide, transforming city skylines and redefining office culture in the process. The company's valuation soared, reaching an astounding $47 billion at its peak, a figure that stunned both Wall Street and Silicon Valley. Neumann became a star CEO, known for his unconventional style, grand pronouncements, and relentless optimism about the future of work. WeWork, it seemed, was unstoppable. The future of work had arrived and everyone wanted to be a part of it. Exposing the risks and controversies behind WeWork's billion-dollar empire, this is where the story takes a dark turn. Beneath the surface of WeWork's meteoric rise, however, cracks began to appear. Neumann's lavish spending and unconventional business practices raised eyebrows. He invested in everything from wave pools to a private jet, often blurring the lines between personal and company expenses. Lawsuits and allegations of financial mismanagement surfaced, casting a shadow over WeWork's future. Investors started to question the company's sky-high valuation and whether its business model was sustainable. The once celebrated company was facing increasing scrutiny, its flaws exposed for all to see. I bet you didn't know just how quickly a $47 billion company could unravel. The year 2019 marked a dramatic turning point for WeWork, a company that had once been hailed as a revolutionary force in the world of workspaces. The company's highly anticipated IPO, which many believed would further fuel its meteoric growth, was instead met with widespread skepticism and concern from the financial world, and was ultimately withdrawn in a stunning reversal. Investors balked at the company's massive losses, its confusing business model, and questionable governance practices that raised serious red flags. The dream of a $47 billion valuation evaporated almost overnight, and WeWork's value plummeted as confidence in the company collapsed. Adam Neumann, the charismatic co-founder, was forced to step down as CEO amid mounting pressure, but by then, the damage to WeWork's reputation and finances was already done. WeWork, once a symbol of bold innovation and disruption in the real estate industry, was now seen as a cautionary tale of excess and hubris. The company struggled for years to regain its footing, cutting costs and restructuring, but in 2023, it finally filed for bankruptcy, leaving employees and investors reeling. WeWork's rapid rise and even more rapid fall served as a stark reminder to the business world of the dangers of unchecked ambition, the risks of hype-driven valuations, and the critical importance of building a solid, sustainable business foundation.